All right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. So we're actually, it's interesting. The US dollar has popped, following the ADP numbers. Remember, we have ISM coming up here within the next 45 minutes or so. So that's something to pay attention to. That we're going to have the final services the ISM data coming out shortly. But before we get there, I want to talk about some of these levels being tested. Look at the Aussie dollar, really, really critical support. Okay. And this all the supports down here at 76.75. I mean, that's it. I'm just going to write that down because that is huge. Right. And remember, this is ahead of the jobs report. We have a jobs report coming out tomorrow. We have ISM coming out shortly. People are going to be looking at the component. Just a lot of really key levels coming up. And I think that resistance for the Aussie intraday, and I'm just talking intraday, is going to be back up at 77.60. By the time we got up there, it'd be about 77.60. Okay. Then obviously 78.20. All right. So we're in a range, and this is really key support. Sorry, guys. My eyes are like watering this morning. I know you guys can't see it, and nor do you need to see me this early in the morning, to be perfectly frank with you. Okay. 1 second, guys. All right. Let's go into the rest of the charts. Sorry about that. So the euro dollar, really at triangle support here. We have further support down here at 121.30. That's going to be key for today. 121.30. Really key support, although we're on some, I would argue we're on some pretty key support right now intraday, but we could obviously do this, which I think is quite possible. Okay. Resistance is going to be all the way back up to 122.40. And we are in a range because this is obviously a triangle. Okay. Cable. So the cable, as you guys are very well aware, 141 to 142.50. And matter of fact, 142 is obviously key for today. Okay. So this is easy. This is going to be pretty easy analysis today, actually. It really is. Okay, 141, 142, I did not need to do that, 1.4250. Okay. I think I've been putting it in bullish while we're above this 141 or 140 level. I should probably just do that again. But anyway, okay. Let's go look at the Kiwi. So the Kiwi broke no, wait, hold on real quick. We broke that trend line, but before we get too excited here, remember, this is my chart of the day yesterday too. That's why I'm finding it so interesting. And I guess if you look at all this previous support, basically comes in around 71 cents, just in case we start falling a little bit. But I'm going to say next level support 71.50 from here. On rallies today, we may struggle up to 72, up to the 72.15 level. It's possible. But I'm going to write down 73 and 72.15. I'm going to write down both just in case we get a bounce here. Okay. Dollar Canadian. So the dollar Canadian is up against resistance right now, but I was just telling the guys and gals in the chat room, further resistance comes in at 121.15. So let's write that down. 121.15, 121.50. Support is obviously 120. And we went as low overnight as 120.25. So you got to write down both those numbers. We're in a range. Actually, while we're below 21.50, we are bearish. Right? Dollar Swiss. So same thing as we've been writing forever. 89.30 to 90.80. Bearish while we're below the 200-day. US dollar Norwegian krona. We continue to find support down here at, I'm just going to write down 825 now, and then the resistance is at 842. Right. And let's go to the dollar yen. Or dollar max, sorry. Dollar max right up against resistance. I'm going to write 202 and then 230. We're right near resistance right now, as you guys know. 20.02, 20.330, and then support 1978. Nothing changes there. And this is actually triangle resistance right now. And by the way, if you're in the chat room, or if you're not in the chat room, I did sell some dollar Mexican peso at 19.99. Because all I think is this is just pre-non-farm payroll adjustment, and then remember we have ISM coming up, so I'm scalping around a little bit with small positions. It's nothing to write home about. I could have the dollar Mexican peso go all the way back up to 2030, and I'd be like, yeah, well, I'm not going to let that happen. I'm just saying, I'm just trying to scalp around in here. Dollar yen. Hey, I want to take a real quick look. Well, I was dollar max, euro max, dollar South African rand, still trading heavy. Notice how we can't even break above this. Dollar ruble, Turkish lira. I think it's been holding up pretty well. All right. Sorry, I just didn't want to take a look. Dollar yen back at 110. So 110.20, 5, 109.30. And that's interesting because that 109.30 has been such a big number for so long, for like forever. It's just been a big level. So 109.30, 110.25. We're going to keep it in range. Dollar index. So the dollar index needs to get above 90.50. But notice how we're really holding above this support. I mean, we really are. I mean, that's just, 89.60, 90.50. I mean, I'm gonna keep it in range for right now, just until we get past tomorrow. But yeah, definitely some dollar positioning squaring going on. So S&P. Big support here. I actually, you guys remember the analysis from FACE, and I'll just say it again really quick. This is a little small head and shoulder pattern. In case we drop towards support, that'll take us back down to the basically 41.30. I mean, worst case scenario today, we dropped to 41.30. Well, I mean, it's not the worst case scenario, but like, I mean, realistically, I mean, what's gonna really happen here? Unless the Fed starts tapering today, where any drop was gonna find support down here. Resistance, I mean, 42.30, I guess. And I'll write, well, no, never mind. I was going to say I'll write further support at 41.80, but we're basically on it, so I'm not going to. Just want to take a quick look at yields, and then let's go gold, silver, Bitcoin. Now, gold is really peeling back today, and this is, remember, this is the chart of the day 2 days ago, and as you guys know, I was very, 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 very weary ahead of that 618 retracement, right? I do think we're going to find support down here at 1845. That's the 200-day moving average. If you guys really want to be long gold, which I think being long gold's the right trade, but being long down here is much better than being long up here, right? Am I right, Stelios? Am I right?
We talked about it yesterday, and I did say I'm a bull, but I think it's a great risk reward to be short. It's a good risk reward, right? And it happened.
Yeah, I mean,
and there's one of the guys listening on FaceE who wrote it, the Turkish guy. Oh, there you go, Gorkem. He said, thanks for that. I think he wrote it, and well done to you, Gorkem. Yes.
Yeah. I mean, it was a great short yesterday, right? So who is in our chat room was talking about everybody's targeting up here around 1960, around this resistance level. Craig was yesterday, and I'm like, man, I don't know, man. The 618, we were overbought. Relative strength is divergent. I was pretty much, the indication. Now, I don't know if you really want to short here. I think we're in no man's land now, but being long up there, 1845 is support. While we're above that support, we have to be bullish. Okay. 1920 is resistance. I don't think anything's changed there. This is going to be really critical support for anybody who's bullish. Silver, let's take a look at silver because I haven't looked at silver today. Are we breaking that trend line? We are. Damn, that's not good for silver. That means any move back up to 2770 is going to find resistance now. I have to do this.
Of course. It's interesting. I was reading there was a sell order early today, Asian trading of basically the annual production of physical silver in one trade. Nice.
What? I'm sorry. Say that again.
Apparently, in Asian hours, when really the sell-off started,
Yeah.
there was an order which was equivalent to the annual production of silver.
Oh my God.
Yeah. And they keep doing that. They keep doing that in Asian times, usually because it's very liquid, and so you're going to get these moves, which is
Oh
interesting.
my God, that's crazy. Gorkum says he's still short gold. Good for you.
Yeah, well done.
Nice. Bitcoin. Let's talk a little bit about Bitcoin because Bitcoin broke, but I'm not a buyer of this. Look, these types of setups, especially below the 200-day moving average, this would be perfect today. And I'm just going to throw this out there. Perfect today, right? Boop, boop, boop. And then everybody gets long or gets squeezed out. We're still below the 200-day moving average. And then it gets enough people squeezed out then to reverse through the lows. One thing I like about cryptos, especially the big ones, obviously like Bitcoin and Ethereum and Litecoin and stuff like that, they're very technical right now. There's enough liquidity, so they're pretty technical in nature. There's not a lot of algorithms that are focused on cryptos yet. So because of the liquidity, a lot of these algorithms don't want to be like totally involved with them yet. But I'll tell you, I like you can play false breakouts pretty good here too. So I'm still going to write down 41K is resistance. Support is going to be 35K. Okay. I'm still going to keep us, I'm going to keep us bearish while we're below the 200-day moving average. So, okay. So here's your bias chart. What's Stelios, what are you looking at this morning?
I just took a snapshot. Hold on a second. There we go. What am I looking at this morning? Good question. I think we're still in anticipation of tomorrow's payrolls, even though we do have some movement today, a bit of risk off. But really, we've been grinding higher, so a correction, it's more than expected. Metals obviously getting smashed pretty nicely for people who are short, but I think tomorrow is going to be the big one. So and there's a lot of people I interact with who are saying, oh, last month's number must have been some kind of aberration. It has to beat we're expecting, what is it, 600,000, or it has to be a lot higher than that. So I think the sentiment might be that we're expecting an even higher number than that 600,000. So I mean, I don't know.
Yeah, it's gonna be interesting. So anyway, I don't know if Steve is here.
He is here.
Of course I am.
Hey, Steve, how's it going, man?
Good. How have you been, mate?
So what's going on? What are you thinking today? We have gold's pretty weak, dollars bouncing back obviously, but we got big non-farm payroll tomorrow. So what do you think here?
I think both gold and silver have broken down through some interesting formations. So that could potentially produce, some follow through to a new buying opportunity. Clearly I'm not going to be in the business of predicting, numbers. I mean, nowadays you can't even be 100% sure that you can predict the reaction of the market if you know the number. But I'll reiterate what I said before. The previous event risk that we had, it's more than clear that the general direction is, until proven otherwise, higher for equities, higher for precious metals, lower for the dollar. Now, admittedly, there is some attempt to do some damage to those trends in the short term with the move we're seeing today, because many of them were anyhow in the precipice of producing some technical breakouts, which I'm going to show in a few minutes. Can tomorrow's data be the catalyst to finally see some counter trend moves? It's not unlikely. I mean, the timing is good, right? The timing is good. Now, is it easy for somebody to commit to positions today, seeing these moves ahead of tomorrow's data? Clearly, if you want to do that, you need to be very careful with, the risk reward you employ, so on and so forth.
Yeah. All right. Well, Steve, I'm going to let you take over from here. And Stelios, I am going to go get up and walk around for a little bit. It's the open, so I want to get away from the craziness as the market just opens here. So
that's a good idea, mate.
Yeah, good luck, everybody.
You do, mate.
Hey, by the way, did you guys know? I don't know if I'm gonna tell everybody that's listening in here, because you all are family. I'm actually going to be interviewing Mark Faber next week of the Boom, Doom, and Gloom report. Boom, Gloom, Doom. Is that what it is? Boom, Gloom. I was saying like not in the correct order. Doom, Boom, and Doom, Gloom, and Boom.
I don't remember actually, but it's all the ooms.
Yeah,
I'm very excited about the interview.
I'm not sure what and how. What way, but he's gonna be talking, or I'm gonna do a big interview with him next
Looking
Tuesday.
forward to it.
It's cool.
Yes.
And I think I'm gonna bring Stelios along too to do it as well.
Or whatever you want, man.
I know it'd be cool. Anyway, yeah. So you guys will be in for a really good treat next week. So anyway, all right. I'll talk to you all later.
Bye, mate.
Bye.
Thanks, Blake. Okay,
Okay, Stelio, finally,
yes,
finally, a day that it gives us enough stuff to talk about. Technically speaking, I mean,
yeah,
we seem to be having some moves today that it's not that they are huge in extent or groundbreaking, but given the technical position that we had in some FX pairs, several FX pairs actually, some of the metals, so on and so forth, I think it's going to prove to be an interesting day.
yes. Well, let's see. But the problem is, ideally you want some follow through, but tomorrow's payrolls might just ruin everything and put us back to the usual.
Yes, or
trajectory.
Exacerbate this reaction that we see starting today.
Let's go, but let's see. But one thing's for sure, I don't want to predict what's going to happen. So I'm, apart from my core positions, I'm not doing much ahead of it.
Yeah, makes sense. So a lot of things we can talk about. If we want to start from equities, if you remember, I kept talking about the possibility, especially the S&P and the Nasdaq, right? They were both showing a possible scenario that we had one more leg missing to the downside. I talked about that. I even took a short position in the S&P, which I'm still carrying. And if we do see a continuation of this move that started pre-markets, I'm watching this wedge here. I'm watching this channel here in the Nasdaq, as you see both of them in the precipice of breaking down, while at the same time, and not unexpectedly clearly, look at the Aussie trying to break through this small head and shoulders formation. Now, my thesis hasn't really changed here. I do believe that the Aussie is probably in some type of a prolonged bullish consolidation. And even if we break through this head and shoulders formation, its implied target is not at an area that really destroys the longer term bullish thesis for the Aussie. So keep that in mind. But in the short term, this type of a breakdown does give us, let's see, what's the target here? A target roughly at 74.70, 74.80. Kiwi, look at this. Just a few minutes ago, we started probing the area below the channel, and we drew this many days ago here on the webinar, right? As a possible, um, you can also see it on the weekly charts that I posted, on the weekly analysis, on the daily chart, on the weekly analysis to be very exact. So Kiwi especially was looking very decent for one more leg lower, and we seem to be attempting to start on the way down here. Stelios and Blake already talked about silver. This is the formation I had about silver. If you remember, I talked about this larger formation as well, the triangle. We got rejected once again, like 2 days ago, from almost retesting the triangle trend line resistance. We now seem to be breaking below this channel. The implications are bearish in the short term. Keep in mind what I'm saying today, all the things I'm saying today have to do with the short term. My bias about the dollar and everything else hasn't changed, the list in the medium to long term. But that doesn't mean that the markets always move in a single direction, right? And to be honest, it's very healthy to see some counter trend moves in the short term, even gives better opportunities for us to join, the larger trend, right? Here is gold. This is the formation I had in gold, and this is what we drew here on the webinar. What was it, yesterday, the day before yesterday, something like that, when I said that, listen, this formation looks like it would break lower, and why not backtest these broken channels, trend line resistance as support before we continue higher. So nice breakdown today in gold, and if we keep seeing this type of momentum, we might even see a deeper pullback, right? Something to turn people more bearish than just backtesting this channel. Even if we see, a penetration through this channel, I'm not going to be changing my thesis. I'm going to be looking for 1805 as the next downside support. If this 1850 area doesn't do the trick, I'm going to be looking for 1805. Now, since we focused on commodity currencies, let's continue with them before we go to some other stuff. USD CAD, where is it? There it is. USD CAD, nice reaction higher so far today. Keep in mind, no bullish breakout yet. You can see it here, right? These trend lines. So, technically no breakout yet. We're not far away from it. And USD NOK, here it is. Area, the pivot area in this case remains roughly at 840. We're not there yet. So keep that in mind. Trend hasn't changed even in the short term before we see moves like that. Now, AMC halted, by the way. Okay, interesting. We were having a discussion. Stelio, did you see the announcement of AMC?
I saw the announcement. They're saying, oh, these valuations or whatever, however they said it. Basically, they said,
don't buy.
Basically, they said that we think valuations are wrong and we're going to issue more shares. They're going to take advantage.
Yeah, but imagine, that's what we were discussing with Dimitri. Imagine when they decided to make an issuance under current circumstances, what the lawyers told them about legal liability, right? Because in essence, the statement is like, the market is extremely frothy. We're issuing stock, but we don't advise you to buy any. So, whenever people actually buy this new stock at market, they can't actually go back and sue them, for
Well, you know what? Why not? The board, I think they made the right decision.
No. Listen, I'm a capitalist, as you know. I'm totally in favor of doing whatever you want, right? But of course, this is a double-edged sword, because I'm in favor of doing whatever you want, as long as there is no backstop to what you're doing and the negative side effects that will come back to haunt you, right?
Yeah.
Because doing whatever you want, for example, using like 95% of your free cash flow to buy back your stock, if you're an airline company, and then getting COVID and governments coming back to rescue you, I'm against that. I'm in favor of you using 95% of your free cash flow.
You should be able to fail, end of story,
to buy back your equity. But if you do that and then you have no money on the side, tough luck, dude. Tough luck. Exactly. Sell your company and its assets as distressed assets to whoever wants to buy it, and bye-bye. Let somebody else take over.
Yep.
Anyhow, AMC got halted because it's at minus 20%. So there's going to be a, what is it, a 15-minute cool-off period? What does it tell you?
I don't remember, but yeah.
Something like that. Anyhow, back to what we were saying. So commodity currencies looking like they want to make the move. At the same time, Euro has been made an attempt to break down yesterday, pared back almost all its losses, actually all its losses by the end of the day. So we had no breakdown. Doesn't seem that likely that it's going to have the same fate today. I don't see it easily as crawling back from this hole to remain unchanged on the day. So I do think this is a legitimate breakdown, as this seems to me like a legitimate breakout in the DXY. Now, again, just reiterating, keep in mind that all this is in the context of shorter term counter trend moves. For example, in the case of the Euro USD, I think we might just see a full retracement of this ascending wedge, as theory implies with wedges. So we might see a move all the way down to 119.70. Will this change my long bias in the euro? No, it won't. It won't. We had several signals. We had the RSI diverging, so on and so forth. That at some point in the not so distant future, we would see a counter trend move in the dollar, and it might be starting today. And as I said, can we reverse these moves tomorrow based on data? Yes, we can. But there is also a very, very good chance that the data tomorrow are going to be a catalyst for these moves to actually start unfolding further. For example, if we see good data and the market perceives that as dollar positive for any number of reasons. For example, one reason could be that they believe that good employment data will force the hand of the Fed to hike earlier. Do I believe that's going to be the case? No, I don't, but it doesn't matter. What matters is what the market believes, not what I believe to be right, if I'm right. So, we have to go with the flow. So we might see good data tomorrow, and these, good data just accelerating dollar gains in combination with the fact that short term, we clearly had a very bearish sentiment in the dollar positioning as well, very bullish sentiment in equities. It might be a good opportunity to shake off some of the weak hands. As I said, I don't believe that these type of moves will last long, or that we're about to see like the high in equities, the low in the dollar. But that doesn't mean that we can see these moves unfold for several days, even a few weeks. And that might be more than good enough to make some decent gains, because keep in mind that the risk reward is still very favorable to be counter trend. Your chances are not favorable, right? Don't confuse the two of them. I mean, your chances, since the data are still weak, since the moves we've seen so far are very short term, the chances are not in your favor, but the risk reward is definitely still extremely in your favor. If you want to, bet some money on the, on counter trend corrective moves. And as I said, I find it interesting that so many instruments at the same time are trying to produce the same type of moves. So there seems to be some kind of a synastry, some alignment, which, I think it's a good signal if you want to, look for a move. Speaking of which, equities are at the lows of the day. S&P down 1% as we speak, Nasdaq 1.6% down on the day, Russell 1.8%. So it's a bigger loser in this case. The Russell, here it is. Keep in mind the Russell, though, still within what looks to me most likely to be a corrective consolidation. But even within that context, there is some decent room to retrace down to this triangle trend line support. That's at 212, and we're currently trading at 224. So there is definitely some room for that move as well. Now, the VIX found support once again at this 15 area. You can see it here if I zoom out. Let's see if it can form some type of a double bottom here in the 15. In any case, this 20 and a half area remains resistance. So I think in order for us to see, something actually happening, we need to see the VIX punching through 2021, closing the day above. Then we can start talking about more upside in the VIX and clearly more downside in the S&P and the rest of the equity indices. It's not like the S&P is going to be doing something and the rest of the equities will be doing something totally different. The extent of the move might be different, but not the direction of the move itself. Let me have a look at some of your questions and take some hints from there. Jane says, agree, BTC rug pull incoming. Yeah, listen, having to do with cryptocurrencies, my thesis hasn't changed. And I'm not talking about my fundamental thesis. I'm talking about my technical thesis. I still think that this type of move we're seeing in Bitcoin and Ethereum, the corrective in form, right? Now, am I 100% sure that the correction is a triangle as we see here? No, the correction might be something more complex, might be a channel, right? Something like this or whatever. But so far, the triangle theory seems to be holding. Actually, at the highs of the day, we retested the triangle once again and we've pulled back from there. Same deal here with Ethereum. You can see it. We actually punched through the triangle a little bit, tested the 50 DMA, and we got rejected. So I do think that cryptocurrencies have one more leg lower, and what a better opportunity to see that leg lower unfolding if we get some risk off. Listen, I've said it even back in 2017. I haven't changed my thesis. Oppositely from the cryptocurrency crowd, I'm not changing my thesis. Cryptocurrencies are the most speculative asset. Personally, I consider it impossible for the markets to be tanking and cryptocurrencies to be doing good. It can happen for a few days, but if we really see a turn lower in risk appetite, as it's called in general, I find it absolutely unlikely for cryptocurrencies to be rallying higher while the rest of the risk assets in the market are being sold aggressively. So if today's move lower and the short-term breakdown we're seeing in the S&P and the Nasdaq indeed are the first course of the dinner or lunch or whatever it is, and there is more to come in the upcoming days or weeks. As I said, the evidence is still, not conclusive, but let's make this assumption. Then you should expect that very, very soon we're going to see the next leg lower starting for cryptocurrencies, especially Bitcoin and Ethereum, technically speaking, look perfectly positioned for another move lower, right? So my advice is don't believe for any moment that you are safe being long cryptos if the markets start performing badly. Okay. Now, we have questions about platinum, palladium, so on and so forth. I'll be more than happy to have a look at them. Look at this. Don't say that, I wasn't very clear about what's happening here with platinum as the main case scenario, right? I mean, despite, and you know that I always try to distinguish my macro thesis with my trading bias thesis, right? Because I know well enough to know that I should never ignore the technical picture, right? I'm very, very bullish platinum in the long term. But, I told you in advance that this move had no impulsive characteristics whatsoever. So the breakdown from this triangle was more or less to be expected. And the breakdown after this consolidation is also something to be expected. And, I said many, many times that I wouldn't want to be long platinum in the short term. I do think, though, that if I said back then, when I started saying this, that I do think that this can be very, very a very nice technical development, because it might give you the chance of being long at better levels, like for example 1040. So I think that especially today's move, if confirmed by the end of the day, opens the door for a move to 1040, which of course we'll have to judge on how the price action unfolds. But I think that this is going to be a very interesting area to start loading up the boat for another leg higher, because I do believe that the direction of all these assets remains to the upside. Now, Palladium was looking like it was breaking out, now seems to be posting here an evening star formation when it was just barely above the channel. So we might see a more complex correction unfolding to the downside. That's not unlikely, because we still have a series of lower highs. I still believe that this move lower is going to be corrective in nature, so let's keep monitoring it. And here is copper, which got rejected once again from this channel, which makes this correction still ongoing. So we didn't have a direct breakout from there. So we might need to see another attack to the lower boundary of this channel before we actually break higher, right? So something like this. There was a question about from our friend about USD TRY, and if you remember, I warned multiple times, expect the USD TRY. I said it while we were doing this. Expect the USD TRY to find itself to new all-time high territory. I'm afraid that that's going to be the case, and I'm afraid that there is a very good chance that we're going to see an acceleration higher. As I said, my next upside target is the 903 level, the 127% extension of this pullback that we had. So, and of course, you can expect that this 850, 855 area from resistance to be turning as support from this point on, right? So, in my opinion, there is absolutely no reason why somebody should try to fade this move. Technically and fundamentally speaking, I think there is a very good reason for what is happening. Erdogan is calling once again for, what is he calling for, Stelio? Rate cuts?
I've lost count now, but
yeah. So, knowing how much power he has, that in essence, his word is an order. If he's asking for rate cuts, it's extremely likely that we're going to see rate cuts. And guess what? Yeah, capital doesn't like that, right? In an economy that already has high inflation, instead of and other fundamental issues at the moment, and a lot of instability and uncertainty. Because don't forget, a prolonged currency depreciation is also a self-fulfilling prophecy, right? It creates its own circle of evil, because if you have foreign capital and you want to bring it in Turkey and gain exposure to the Turkish lira, you're going to go back and see what has the trend been, and you'll realize that the trend has been extremely bearish for the Turkish lira for, what is it now, 13 years, 14 years, something like that. And then you're going to realize, like, oh, wait a second. I mean, this currency has been losing X% per year, plus inflation, the erosion from inflation. And what am I getting in return from having the currency? No, it's not good enough. Sorry, I'm not going to do this. And of course, it deters FDI, foreign direct investment, from coming in the country. And faith in a currency is something that once it's lost, it needs a lot of time to be recovered. So I think that the Turkish lira will have more pain ahead. Most interesting about cryptos is opening a margin position. I agree with you, mate. Turkish people loves to get rich in the easiest way. I disagree with you. Unfortunately, I don't think this is a Turkish people issue. I think, unfortunately, this is a global issue. People suicide after that bear, sold their houses to buy crypto. That needs to be regulated immediately. I agree with you. I totally agree with you. As I said, the only part I disagree with, unfortunately, I don't think this is isolated to any single country, be it Turkey, be it Greece, be it US, be it whatever you want to put there. So inflation data came out today for Turkey. Buddy, it's bad. Yeah, I know it's bad, mate. And imagine, it looks bad. Imagine what the real inflation is, right? Because almost every single government has changed the way inflation has been calculated to to make it look better for obvious reasons. So
by the way, Steve, we got the ISM numbers, and there was a beat. Expected 63, came in at 64.
Let me see, Stelio. Yeah, for some reason my data flash today has been misbehaving. I probably need to restart it altogether. Yeah, 64 versus 63, indeed. Yeah, a little bit better. Yeah, I doubt that's going to be moving the market in one direction or the other, but thank you, Stelio. Okay, so what else do we have? Equities seem to be paring back some of their losses, by the way. I don't think you should read so much into it. We know that the usual mentality, the buy the dip mentality, is going to be prevailing even when we see a move to the downside, a legitimate move to the downside starting. We know that the initial Pavlovian reaction from the market participants is going to be buy the dip because it works more frequently than it doesn't, right? So it's natural, to be honest. But let's see if this attempt of a recovery is going to be short-lived. In my opinion, it smells like today it's going to be a short-lived attempt to recover. I think there are very good chances that today is going to be a negative day for equities and a positive day for the dollar. So I from what I see at the moment, I trust these moves in the short term as legit, and not very short term noise. But let's see how we progress during the next few hours. Okay. Any more questions, guys, girls? X. Okay. Yeah, X. Nothing has changed here, my friend. There it is. Here is your ascending wedge, right? Very beautiful, clear technical formation with very, very concrete way of trading it. So, status quo remains. We still appreciate within an ascending wedge. The characteristics of that is that the upside momentum is clearly waning. But obviously there is no reason to be bearish as long as we trade above the trend line support. Once we break through that trend line support, I'm pretty confident that we're going to see a move back towards 16. So yeah, that's it. If you want to trade it while we're still within the formation, that's your prerogative. It's not something I would be doing, though. I can tell you that much. What do you think about BIST? With what devaluation of tier Y? With that devaluation, BIST, I have no idea. What is BIST, mate? Sorry, I have
Is
to.
it sexy beast?
I have to claim ignorance here. Oh, it's the Turkish Index. Oh, okay. Yeah. Okay, that's not a good signal to start with, right? I'll tell you what I mean. We have new lows in the currency, and yet this market looks to me like it's producing a corrective rebound after this sharp leg lower that needs at least one more leg lower. So yes, there is the usual thing that currency devaluation acts as a tailwind for an index, but that doesn't mean that an index cannot go down along with the currency, right? It just means that if the currency was not going down, the index might be doing even worse, right? So it looks to me like this market needs at least one more leg to the downside, at least. So I would be very, very careful being long. I actually think from a technical perspective that shorts look very appealing, very appealing. And if we assume that we might even have seen the high of this corrective move, it's not a certainty, the implied target would be a move back towards 1.1000. There you go. Oh, sorry. I didn't notice that. That wasn't dragged correctly. 1,130. That's the implied target. But before jumping the gun, you might want to see this trend line break. Although, if you want to focus shorter term, because, you know, depending on how you want to be trading and your time frame, you can go down in you know, in lower time frame charts, right? So looking at the lower time frame chart, we can see the same formation we saw on the daily, right? Here it is. But you can also notice this. So a shorter term trade here might be this, and then if we break through this, the follow through towards 1,130, whatever that target we saw was. What was it? Yeah, 1,132 to be exact. So yeah, that's what I think about a beast. Nice name, by the way. I had never noticed it. mRNA. Yeah, you see. Another familiar formation unfolding here, right? So this has already happened. There you go. There you go for Moderna. Coming to a juncture point. So, you know, if you want to be short, I think we're getting to very interesting levels. We break through that trend line, we might actually see an acceleration to the upside, right? Yeah. RSI also not showing any divergence here. You can see that we're getting a higher high, and RSI is confirming. So I have to admit that in the short term, it looks rather strong. Yeah. There you go. Moderna. I think we're going to know soon which of the two scenarios is about to play out very, very soon. Okay, guys, gals, see you tomorrow for the rest. Let's hope this day indeed produces the beginning of something, you know, of a more volatile market environment so we can take advantage of. Bye-bye.
Thank you, Steve. Thank you. Bye-bye, everybody.
Bye-bye, Stel.
Thank you.